Well, joining us now with more reaction to Jerome Powell's testimony is Richard Clarida, PIMCO Managing Director and Global Economic Advisor. Rich, always great to see you, have you on the show. You know, our colleague there, Jennifer Schonberger, Rich, was just summarizing Jay Powell's testimony before our lawmakers. But interested, Rich, just to get your high-level thoughts. What did you make of that testimony? What were your big takeaways?
You know, I actually think the chair more or less previewed the message at the press conference, which was not too long ago. And that's really typical. This testimony is typically in mid-February, and there's a Fed meeting at the end of January. So put it this way, I would have been surprised if there was a surprise today. They're in no hurry to cut rates. They think they're well positioned. In depending on how the data comes in, they judge that policy remains somewhat restrictive, and as you mentioned, and your segment mentioned, they aren't inclined to wade into politics or prognostication about tariffs or anything else.
Rich, it feels a little bit unusual right now because it feels like some of the regular sort of Fed critics and wags have been a little quiet as of late. They don't seem to be as concerned here about the Fed potentially making a mistake, right? Do you think that there are any risks from the Fed holding in this pattern where it is right now?
Well, Julie, and good to see you. You know, there's always some risk. You know, I learned that during my 4 years as vice chair. There's always something to worry about. You know, Fed critics had a lot to talk about a couple of years ago, and I was actually encouraged today to hear from the senator, I believe it was Kennedy, who brought up, you know, where we were 2 years ago, 10% inflation, predictions of a deep recession, and what it looks to me and like a soft landing. So I think that's also probably relevant. I think it also really reflects a broad support, you know, in Washington across the political aisle for the Fed to maintain its independence in terms of being able to set interest rates and adjust its balance sheet to achieve its goals. But I agree with you. Less criticism than we've heard at some of these hearings.
Rich, on the subject of inflation specifically, you know, Jay Powell saying today to lawmakers, we want to see more progress there. What does the trajectory of inflation look like to you, Rich, over the next 12 months? Are the risks to the upside as you see it?
You know, the term the Fed has used, which is a pretty good one, is the bumpy road to disinflation. You know, by the core measure was running near 6% 2 years ago. It's about 2.5% now. So that's a lot of progress, but there's still a ways to go. I do think, however, that there's been a lot of focus on the upside risk to inflation and a lot of focus with sticky inflation. But there is a scenario, perhaps not the most likely, but not impossible, which is that, you know, absent any big sustained increase in tariffs, and so far, you know, it's not clear if tariffs will be a bargaining chip or a battering ram, the progress on disinflation could resume. And so I do think maybe markets and forecasters are maybe underappreciating that we could start getting some positive surprises on inflation, especially as we move out of the winter months. So I'll be looking to see if there's any evidence of that.
Well, speaking of the winter months, as the Wall Street Journal pointed out today, we do tend to see more of a bump in inflation, headline inflation, that is, in the beginning of the year, because as the calendar year turns, you tend to see companies maybe raising prices. So that's what we've seen over the past several years. And even in the pre-pandemic period, if you average it out, you saw inflation sort of higher in the beginning of the year and then waning as the year went on. But is that going to be the case this year with tariffs potentially coming to the fore and other factors that the administration is doing, things like these immigration crackdowns?
Sure. Well, I mean, so far that's not going to, you know, we're going to be getting inflation data tomorrow at 8:30, and so that's not going to be a factor in that data, right, and probably for several more months. And I think your question does, raises an important point, which is a lot of the discussion now is really hypothetical, and any effects that this might have on inflation are really, down the road this year. So, in some ways, we're going to be looking at inflation numbers for the next couple of months that really reflect where the economy was, in several months ago because of the lags. Would you consider our policy stance here, Rich, restrictive? Well, the Fed says that in its opening statement, the Fed chair's opening statement made reference to that policy is somewhat restrictive, or perhaps in the monetary policy report. I guess I could agree with somewhat. There are different measures of financial conditions, and obviously stock prices are very, very elevated. We did have a big increase in bond yields, but some of that has reversed. The dollar is strong. So I guess I don't have a problem with the somewhat restrictive description.
Rich, I'm curious to ask you a little bit about the structural changes that are happening in Washington, and some of them at the Federal Reserve itself, as it sort of re-examines some of its climate change criteria that it was looking at before. We've seen a real pushback against diversity, equity, and inclusion, including at places like the Federal Reserve. Do you think that makes the organization the stronger or weaker as it undergoes some of that?
I don't have too much to say on that. I would say I do take the chair at his word on the rationale that he offered for withdrawing for this international global network on the green transition. He simply said, look, it's moved in a domain that's beyond the Fed's mandate. So I certainly think that that's a sensible approach to take. Beyond that, I'm really not attuned or attentive to what the Fed is doing. I haven't been in the building in several years, and so I don't really have any additional comment.
Fair enough. Rich, good to see you. Thanks for joining us.
Yeah, thank you.
Take care.